FGV Holdings non-interested directors have recommended that minority shareholders reject the proposed takeover offer from major shareholder Felda Land Development Authority, calling the RM1.30 per share offer not fair and not reasonable. This is after taking into account FGV's fair value and initial public offering price of RM4.55. RHB Investment Bank said in its independent advice circular today, the FGV non-interested directors comprising Datuk Yusli Muhammad Yusof, Datuk Muhammad Anwar Yahya, Datin Hoi Lai Ping, Dr. Muhammad Nazib P. Alitambi and Dr. Nasudurai Kalinithi have not concurred with RHB recommendation to accept the offer. Directors contended that the offer price is below the fair value of RM1.42 to RM1.60 per FGV share as determined by independent advisor RHB. They say that after taking into consideration the significant improvement on the quality of plantation assets of FGV since the IPO, the directors are unable to, with a clear conscience, deem the offer reasonable. The directors also argue that FGV's management since 2019 have implemented a transformation program which focuses on operational and governance improvements. FGV's minority shareholders include settlers and employees of both Felda and FGV. RHB had called the offer not fair but reasonable. The advisor's rationale for calling it reasonable stemmed from various factors, including the absence of an alternative proposal and Felda's intention to not maintain FGV's listing on Bursa Malaysia. Malaysia is keeping its GDP growth target of between 6.5 and 7.5% for 2021 despite the emergency declaration and the second round of MCO, said the Finance Minister. During an interview with Bloomberg, Tengku Datuk Seri Tengku Abdul Aziz says it is still early but admits that its forecast is at risk given the current pandemic uncertainty. He adds that GDP will be at the lower end of the forecast. Zafrul said that the government is committed to supporting businesses and people as well and are ready to deploy more resources to combat COVID-19 if needed. According to the Finance Minister, the impact of losses on the economy per day during the previous MCO was around 2.4 billion, but this time around the impact is about 700 million ringgit per day. In addition, Zafrul explains that the government has started to implement various stimulus packages that are still ongoing, the most recent being PERMAI, which stands at 15 billion. When asked if the government would expand the debt ceiling, Zafrul said that there was no plan to increase it at this moment. PLS Plantations has proposed to place out 19 million new shares to CIMB Group Holdings ex-chairman Datuk Seri Nazir Razak. The durian planter said the shares will be priced at 95 cents each under a private placement of up to 10% of the total number of issued shares in the company to improve its public shareholding spread and raise money to finance its expansion. In a boss filing, PLS said the private placement, which includes share placements to other independent third-party investors, will also enable the company to raise funds to partially repay borrowings. According to PLS, this placement to Nazir will enable the company to onboard him as a strategic investor. Barring any unforeseen circumstances, the share placement is expected to be completed in the first quarter. Nazir is currently the chairman and founding partner of Singapore-based PE firm Ikhlas Capital Singapore. Dagang Exchange is acquiring an additional 60% of the issued share capital in Ping Petroleum for $78 million as the group looks to strengthen its oil and gas segment. Once completed, it will increase Dynex's holdings to 90%. The purchase will be satisfied by a combination of $40.95 million in cash and the issuance of new shares in wholly owned unit Dynex Energy. The acquisition is expected to be completed by the end of the second quarter. Group MD Datuk Seri Syed Zainal Abidin Syed Muhammad Tahir says that Dynex is pursuing a growth trajectory anchored on pursuing and capturing quality assets at attractive prices during the current downturn and ride the upswing. The group also noted that there have been early signs of demand recovery which have resulted in rising Brent crude oil prices. Dynex acquired a 30% stake in Ping back in 2016 for $10 million. Serba Dynamic Holdings says its proposed private placement involving 336.83 million new shares was oversubscribed by 1.85 times. In conjunction with the completion of the private placement's book-building exercise, the issue price for the exercise is fixed at RM1.51 per share. This represents a discount of 8.1% to the 5-day volume-weighted average market price of its shares up to and including Jan 21st of RM1.64. At RM1.51, this is expected to raise gross proceeds of 508.61 million. Meanwhile, Serba Dynamic said the placement shares issued to its MD and CEO, Datuk Dr. Muhammad Abdul Karim Abdullah, amount to 56.29 million shares or 1.7%. Previously, Serba Dynamic had earmarked some 303 million ringgit from the proceeds for projects in Abu Dhabi, 100 million to repay borrowings, and 100 million for its Teluk Ramunya yard.